Let's head to the markets now and look at intraday, and we have joining us for that conversation Ambrose Omodion. Ambrose Omodion is the Chief Research Officer, Invest Data Consulting Limited. Good afternoon, Ambrose. Good to have you on the show.
Good afternoon. Thanks for having me.
Great. So how's the market looking intraday?
Yeah, the market is still positive at this hour. I'll tell you that after the 4 days pullback, we are seeing an investor entering back at a lower price because the market is about buy low and sell high. For me, it's a good one, but we can't say yes, the market is there now. But market is trying to recover. And from next week, as we expect to see more corporate earnings, that will give the market a boost expected. But don't forget that at this time, investors also are trying to reassess the opportunity in the fixed income market as a result of higher yield was seen after the last auction on Wednesday. That is still there. But I believe that when inflation figure hit the market by next week, that will give a clear direction where those fixed income players should be. Because if inflation goes as high as 30, and you are rejoicing that you are having a 19% yield for 1 year, you see whether you are in a safer hand. Because when inflation is going on, that means you are actually having a real negative return. That's why people that are wise are looking at how they can marry the dividend season and the capital position in this short term, because if you are waiting for 1 year to get 19% and I can get 20%, even 30% within less than 2 weeks or a month, that is better for me than I'm waiting for. That's why the players should be for banking sector, because they are the major players in the money market. For me, for design investors as smart trader, take advantage of market pulling back to buy at a low price ahead of what corporate earnings.
Yeah, so Ambrose, we were celebrating 2 days ago after the auction on Wednesday, obviously, the hike in the yields, 19%. But by close of market yesterday, we learned it had dropped to 16%. Do you see these investors running back to the equities market with this, of course, the downward turn of yields?
Yeah, actually, market timing is very, very important when it comes to investing. Like I said earlier, if you are waiting for 364 days to make a 19%, or now it dropped to 60%, and I can have dividend yield from a company 10% in less than, because I tell you, most of the companies that will announce their results in the month of February and March, before the end of April, most of them have done their AGM, they have paid you your dividend. And also, if the market continues to recover and also add to your capital position, you'll be better off. I believe that people are thinking where they put their money. Is it where they have higher risk or where they have less risk? Because the attractive in the physical market is the low risk. But why do that invest in equity are taking calculated risk to make higher return?
So today is Friday. How do you see the market closing and then heading into next week? Do you see it getting the same attention it got this week? I think there's another auction upper week in the next 2 weeks. But for next week, what do you see?
In 2 weeks' time, for me, this now that pull back to sustain, and also we expect that the early filers of the corporate end will start in the market from next week. The performance and also the corporate action will determine how fast it can recover. But I believe that today is a sign that market is also recovering. If the trend continues next week, that will be good. But I believe that market will feed on the earnings that we're expecting. And also inflation figure that will come by next week also open the eyes of those in fixed income market and those also that trade equity. Will be a better instrument or window to put your money. It depends on your own investment objective. But I believe that for those that are not as big as banks, the banks play more on the money market, also strategize and see where they can put their money for short-term return.
How much chance do individual investors have in this? I know you've been talking more about institutional investors.
Yeah, banks are going to have big money, but for people like me and you that are retail investors, you know why you are in the market. If you are dividend investor, this pullback is opportunity for you to come back to the market. If you're a trader, this pullback is opportunity for you to come to the market, because you have more money doesn't mean that you won't take wise investment decision. Now the price have pulled back after seeing a kind of fear of not missing out that pushed the market in January to almost 40% in that month alone. We're seeing correction to create opportunity for new entrants. Those that know what they are doing in the market, that have good rules and also trade plan, to come back to the market, let their go guide them and trade their plans to also make money. That's why the market is oscillating. Oscillation is the beauty of the market. Anywhere in the world, that is the market dynamics. You buy low, you sell high, profit taking, the opportunity for price to come low, you buy. These dynamics in the market will continue, whether in the mature market or our market, that trend will be there.
All right, Ambrose Omodion, thank you so much for sharing your thoughts with us and observations from the markets.
Thanks for having me.